I have Spotify. Okay, no music today. We're just gonna sit here in the eerie silence. It did work. Cool. Right. I really need to get a third travel monitor, I think. What's up, friends? What's up? What's up? What's up? What's up? Okay. Lower DD band, tap, S&P, trade small or trade medium ish. Ooh, right at the wire. Okay, 8:30. Market's open. Let's go. Now your liquidity maps in. So by the way, we put in the ticket yesterday with our second development team to convert overnight dynamics. Oops, which I need to do really quick. To platform version, platform code. Now we can have real-time dynamics. I think you guys are excited about that. I know I am. Especially I love you guys. 44, 44, 44. Right across the board. I hate tethering myself to the computer every single night, once a day, just for one calculation. When I fly, like I did last night, you guys have to wait. So outside of DD bands on Qs, just kind of take it easy today, right? $19,817. Oh, let's wait on here. So that way you guys don't have to wait for me anymore ever again once it's done. Give it about a couple of weeks. We'll have a working prototype there, and we will have hedge pressure, weekly resilience, and a correlation change or a calculation change on hedge pressure. Particularly since they started adding, Tuesday and Thursday options. We have another trick we're going to do to account for additional risk since the creation of the hedge pressure. The options have changed. So we need to do some. So what we believe is that we can squeeze out an additional like 5%, 10% maybe efficiency, accuracy. Like your hedge pressure will be shifted to like maybe one strike lower, one strike higher in some instances because it's moved to the nearest strike, right? So the idea is that 5 to 10% more of days hedge pressure should break less often. Like it's a 60 or 70% probability on these type of moves. We think we can get that up another 5 to 10%. So okay, so we know bear long up is pressure from here to here on the upside, but res less than 0. You know how this works. This is downside to here. Resilience predicts hedge pressure break. This is downside move today. Hedge pressure break. God, my handwriting is terrible. I have a newspaper for a mouse pad. I'm gonna take a picture of this, you guys, and put this in Discord. The Wall Street Journal is literally my mouse pad. Hilarious. I'll put this in chat. I've got Eric Adams' face as my mouse pad today. If you guys know who that is, it's New York City's mayor. Yeah, it might be a sit out day today. Hold on, wait. There it is. Literally. All right, so resilience, be careful, hedge pressure break on this side. We have lower DD bands kind of down at the bottom. It's not a super actionable day today, so you guys be very careful. If we get the resilience numbers go above 0, then that's good. But be on the lookout of this. The market's going to want to try to be bullish. Any bull zone breaks are takes. Okay, so but today the Nasdaq resilience is positive, so it's going to push into here. Advantageous traders might take a small short off of the blue. You guys remember me? I don't usually take that leg. I usually wait on days like this to see if they go bullish, and I jump on the bull side. The hardest pill to swallow is to take a short off of a scalp here. For instance, here would be a scalp. Remember, when Nasdaq is positive and S&P is negative, you have index divergence. The light is on. So S&P is usually the winner of the two. If there is anything, a teeny little weeny short set up here, a scalp off that. And Q resilience is kind of positive. Actually, it just jumped down. Let's hit it with medium size position. I don't normally take, a small size position. I don't normally take the short here. This short leg is one I skip a lot. We talk about that in the Zoom call, just because I'd rather see it go bullish. But let's give you guys some action today. This is the account that made 5,000 yesterday, so let's just play with that a little bit. Let's kind of put the resilience on here. Like I said, I'm not super duper confident in a trade like this, but it's worth noting that any break to the bull side is a chase. So so we know here, like we wait, right? We wait for this. If there is a break, there's a chase. We know how this works, right? If the market does decide to flip bullish, we go that way. Take a look at DD ratio today. It's down to close to 0.6, right? Market is losing a little bit of steam. Bull side's still good, but it's pulling back. Would I take a top of bear zone short? Yeah, that's basically what it is. And that's the only reason I'm justifying any kind of trade off of this. I think Nasdaq's going to be the player today because the index divergence. The S&P's already down. The Nasdaq's just the one that's trying to move. So chase on the long side only. Chase only. Anything else in here, there's no long setup, right? Inside of here, there's just a tiny little short setup. We know how this works. We have resistance here, and it only goes back to test the open. And it is a proxy betting on that the S&P is negative resilience while Nasdaq is positive. The S&P is going to be the one that carries the horse. Index divergence, right? We always say, as long as there's no irrational stuff, which there isn't. And by the way, the new irrational rules, you guys, hedge pressure is no longer part of the irrational rule set. Only monthly is. So we're going to change these alerts. So the proxy bet is the S&P is going to be filling its gap to the downside. It might drag the Nasdaq with it. So all I'm doing right now is I'm betting that the Nasdaq inside of here has resistance. So this is basically the bet, right? Bear zone is always a really strong bet, but the DD ratio disagrees with it. So this is the problem. When that DD ratio is positive, the one issue is that this can happen, right? It can go up and kiss that bull zone very quickly and then come back down, which is why inside of here, I only want a small position if I do short in case it pops, because if it pops and then it goes long, that's my chase only zone. These are scary trades to take when this doesn't agree. It's close to zero. I mean, close to 50, but it's not good enough. So this is not the best entry to take. From here, there's still that much squeeze on it. Almost 60 points on the Nasdaq. So I'm not excited to go into it super long on here, but I am betting on this negative resilience in the S&P ultimately going to bring it down. So what I'm doing is going to put 2 contracts here. If it pops into here, I'm going to hit it with like 2 or 3 more and trade it back into the zone it started in. That's some major news. So you guys, would I take a top of bear zone? Frankie nailed it, you guys. What's up, Zoom call? Love you guys. How y'all doing today? Y'all killing it? Y'all crushing it? I'm over here. Anybody here in Louisiana? I'm down in New Orleans. You guys want to come party with me this week? I'm on a vacay. You know, iDoc Talk, you know who's always late every day in the Zoom call. Well, she's going to be late for a whole week because she's on a work trip. I usually tether along some of her work trips just to kind of keep her company. If any of you guys down here in Louisiana, give me a holler. By the way, everybody in Zoom, if you could do me a favor, head over to the YouTube. I'm going to post the link over here. since we all came over to Zoom, our YouTube channel is starting to look like a barren desert because we just over here all the time. Go over there, drop a couple comments. If you don't mind saying something in chat over there, just one thing. It triggers the bots to start posting. The bots don't start posting the links until people say something. Arsh, what's up, buddy? Oh, let me make sure my sound is good. Let me see. This is my brand new travel mic that I got. My first time using it on YouTube. I think I tested it with you guys one time. Let's see what it sounds like. Hello, traders over here in Traderland. Like I said, today it's a riskier setup. That S&P resilience is just, I'm not even staring at SPY today, but that S&P resilience is just kind of booty. So we're looking at resistance to bear zone, resistance to hedge pressure. By proxy, when the S&P is negative and Nasdaq is positive, we take the bet on the S&P side. All right, let me see if my mic sounds pretty good. Testing. See, this is my brand new travel. First time using it. Wow. Okay, it sounds awesome. On YouTube. I think I tested it with you guys one time. I do like it. It doesn't sound bad at all. It is a large diaphragm condenser, and I need to put this mofo closer to my face, but that's not bad enough. Go to Three-Legged Dog on Burgundy Street. Great little dive bar. Dude, I'm in. Okay, so anybody here from New Orleans, Louisiana, want to come catch a drink with yours truly? I'll be around until Sunday. New Orleans is our fun little stomping ground over here. We love coming out to this area. Yeah. This is good enough for a travel mic. Can you guys make sure you go over to YouTube and just leave a comment? You know, the algorithm, show it some love. Maybe even you can leave it open on the back end. YouTube is our main mechanism for meeting traders and meeting more folks for our community. So since we're all on the Zoom call, better quality, those of you in the YouTube, we're in Zoom call, it's live with no delay. The YouTube's about to get a 5-minute delay on it. Look at this. Look at this. Doing the little squeezy squeeze. But that's okay. That's perfectly fine. There's deterioration on the S&P. We're only taking it small. And again, I'm not expecting it to completely crash out of here. I just took it small with 2. I'm going to take whatever drawdown I can get. Bear zone is typically the trade to hit. That Nasdaq resilience is positive enough to fill the gap. So that's looking to go there. The chase only on the long side here. Remember, I'm not stabbing it again. This is well within the range. This is the account that made like 5,000 yesterday, right? So this one hit that bear zone. I'm going to wait for the arc, tap a bull zone kiss. I'd be willing to trade it right back down to here. And if it fails to return to bear zone, then I'm going to get out with whatever profit I can get. Watch, I'm going to stab it really hard right there. Again, those of you that haven't entered the trade, bear zone is not the best. Not the worst idea in the world. I can't tell you what to do. This resilience, the DD ratio is still bullish, which means a bull zone kiss is possible. To be very, very careful. So officially, hedge pressure break is no longer considered irrational. It's considered still stable, as hedge pressure breaks are more common under certain mixed conditions. It's no longer considered a condition that destabilizes the market. Now again, chase only on the long side breakout. This is what I hope to see as a trader, is to take that long side chase. The S&P still finding no steam in here, which is good. I don't know if it's going to dump the market, but at least on this side with Nasdaq, I'm going to take about a $1,600 drawdown on the most. I'm going to jump at this with a huge stab one more time. Keep in mind, S&P is right at that monthly resilience. So any break of this on the downside move is pretty gnarly, and it is trying to break. So let's just have some fun on this one, and let's take a look at this. Nasdaq's right at the blue. Yeah. So I just added one more bullseye on Nasdaq. Because SPY is S&P's right on the edge. This is coming down today, guys. MHP break to DD band on SPY. Remember, we do have float on S&P, so we're gonna ride proxy. Gonna watch this trade on the side because S&P is the gross looking one. Nasdaq is the good looking one. So problem with S&P is we already tapped DD band once, which I hate to see, and there's possible float. I will tell you guys, with the way that the market is today, I wouldn't be trading the float. That DD isn't strong enough to float off the bottom. We usually want to see this greater than half by a lot, but this is only greater than half by a little. So the market is starting to deteriorate right now. Let's let it fall today. This is not bull side market. It's looking pretty gnarly. Right? Let's take a look at our monthly maps just to get this rolling. I need, where's my Spotify? That's really what's important here. Do I have Spotify installed on my laptop? Oh geez. Oh geez. SPY monthly map still looking well, yeah. So it's still the projection is still not bearish, but it's jumping out of bull territory. Okay, so you see how that works. Oh geez, it's my Spotify. I kind of do want some music. It's a little sad here. What is my sad here without music? It's quiet. So today I'm kind of just, since I'm on vacation, not really vacation, but I'm in another city. I'm going to be very accessible over the next all day. So today we're gonna do all kind of fun stuff today with you guys. What is my Spotify? Spotify hates me. All right, let's see if that works. Let's go to Spotify's party street. Damn it. All right. So right here, the monthly map is still bullish, projecting and bearish, squeezing from here. This is just trying to jump into bear territory for today. So it's trying to move there. It's not there yet, but it's getting there. So showing a little tiny bit of, I'm still really bullish this market. That's kind of the part that makes me just like not want to short this too hard. But Nasdaq is kind of in a similar boat. You have bear resistances forming like we did the last wave down. So the next 2 or 3 days, Nasdaq's got some bear resistance and some volatility, right? These illiquidity pockets right here, right here, right here, right here, all volatile. And inside of here, you have bull side liquidating on Nasdaq. That's what we're seeing today, the slope up. So Nasdaq is the one that looks bearish, right? Nasdaq's the one that has the better looking mode today. But let's just let's air this to the side of caution. I do think this is coming down. I don't think this is the day to long. Nasdaq's giving us all these signs that it's a goodbye day for Nasdaq. Again, I could be wrong, but we're not going to trust this one today. Problem is it's already tapped heck is going on with my Nasdaq here. You got that right. We gotta get our Spotify priority straight. I have some data in about 10 minutes. So that, yeah, that is the one thing that can get some movement on this market today. Priorities, man. Why are we not playing? Come on. Oh, dude, the internet in this hotel is just booty. It is like... Good time, raise the threshold on the noise gate. Okay. Yeah, let me do that real quick. My mobile setup. There we go. Is that a little bit better? Yeah, I haven't actually played with my mobile settings too much. The noise gate good on this one? 10 minutes ISM data. Yep. Music too loud? Music cool? Hey, what's up? All right, I'm back. All right, hey, good morning. I didn't even see your chat over on YouTube. What's in Joe and Rock Scooter? You feel like the market became so much more transparent. That's the point. Let's have a great day. Set all day for you. You too. Good morning. What's up, Chase? What's up, David? Does the scanner work for you guys? Or every single after the market open, the scanner is down. Let's come back maybe in like an hour. You have to reconnect. Yeah, we have this connection issue since we've moved to the new site. The scanner does not stay connected. It disconnects. There's like a time or a delay or something like this. Simon, if you connect a futures account. So on the futures account, you don't even need a futures account for liquidity maps. Are only done in equities, so you just need equities account with equities data here. A futures account will get you DD bands and stuff automated.
See the storm clouds out in the distance, and it looks like we're finding out if everything we've ever built is coming falling down. Yeah, we saw the light, then it crashed our light. Yeah, we fought that good fight, keep fighting. And just like that, you pull me back in, you pull me back in again. The sound of your love coming calling. Don't know if I need it or want it. Got it or gone before we lost it all. Picked you feels like I got amnesia. Make it easy to forget that I'm dreaming. Every time you get in my head, it's a speed. Higher than I've ever been. There I go, back there again. Just like that, you pull me back in, you pull me back in again. Ritual, just like that, you pull me back in, you pull me back in again. Ritual, all the way can stop me at all. Speeding, feeling out of control. And all the time I fight for your love. I know it's a ritual. The sound of your love coming calling. Don't know if I need it or want it. Got it or gone before we lost it all. Ritual.
Zoom. Oh, dude, where'd my Zoom call go?
You ought to know.
Nasdaq's trying to move.
The night to let it go. Put on a show. I wanna see how you lose control. So leave it behind, 'cause we've got a night to get away. So come on, fly with me. 'Cause we make our great escape. Ooh, so baby, don't worry. You are my only. You won't be lonely, even if the sky is falling down. You'll be my only. No need to worry, baby. Are you down, 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 down?
Oh, crud. What did I just do? I need to close that down. There's so much crap open on the screen. Come on, come on, come on. Oh, too much junk on the screen. Those ISM numbers are coming out. I'm about to get squeezed. Yeah, I'm about to get squeezed. Oh shoot, hold on. Where my stuff go here? We kick the ISO numbers are out. Give me 1 second. There we go. There we go. Looks like we did do a bull zone break. I'm not gonna take this one. Yeah, my first one hit my stop, but this one I'm still in it on. I don't know where my, oh, here it is on my other screen. I'm still in it. I'm still in the short to back to here, from here to here. I'm still on it on this one. And I'm trying to find it because I got like a million windows open on my other little screen here. Hold on. I'm on my travel screen right now. Where is it? Over here. Yeah, we said the ISM data come out. Trying to get my, let me find it over here. That's the thing. Shorting this market is a little risky, but on the bull break, not a terrible idea to take the bull side on this one. Where's my today's number? See, everything here is all set up, not for mobile. Select all, clear. I've been trying to log into my investing account so I can read this news. Why? Key takeaway from the reports: overall economic activity. The largest sector of the U.S. economy remains in expansion mode, which is what the market, worried about a possible hard landing, wants to see. Slow to moderate growth. Yeah. 54.9 on 51.7, 59.4 on a 56.3. So these are decent numbers on PMI side. Yeah. So this is a long break chase. I'm closed out on my shorts. Super bullish on this one. Yeah. News is decent. So news flipped the coin the wrong way. It happens. If you're in the trade for that, then it's not really much of a... Where did my YouTube stream go? The sector of the U.S. economy remains in expansion mode. There you go. Yeah, that was just eval account though, so that's good. I didn't actually lose any actual money, which is good on that. Whenever you tap DD ban, I only trade on the eval side. I don't trade. That's not a real financial. no loss, no actual loss on that one, which is good. So normally, whenever we hit DD bans, I'm taking cautious day. I just try to throw some. I try to pass some evals on it. That's why I hit that one pretty hard. So coin flipped the wrong way, which is good. So the tap from here back to there, not necessarily didn't play out. So I didn't at all put my real account here into that at all. Didn't touch it. Tap that DD ban in the morning. I don't touch it. Very much. I was wanting to wait for it to go to bull side, but you can't really test that out when there's a news event. It can go either way. It's kind of like a coin flip. ISM data is super good, but either way, it's hard to take a side on this one when the S&P is still kind of in that weird mode. While Nasdaq has moved higher, the S&P hasn't. Not yet. So I have to be cautious on this one. This tap will be a resistance here. So there's a scalp from here down into here, so just be careful on that. Oh shoot. Whoops. 1 second. Close everything down. Give me 1 second, you guys. I actually logged out of all of my stuff here. I'm fumbling on my laptop side screen. Where is my login? I wasn't prepared. It's still likely to... I'm still not taking a bull break, so just be careful today. Hold on 1 second. Just close everything down, accident. Log back in. Yeah, I got smoked on that one. What is going on here? Come on. But it was just eval, so good on that one. Actual real loss 0. Maybe these irrational days are the days I usually just... This is one trick that I do. Whenever you have market days like that... Hold on, where is my thing here? Hold on, where is my... Okay, hold on, there is that. Zoom call. There you guys are. Okay, sorry about that. Well, the thing is that whenever there are, remember, I normally only take this trade when there's no event. So all I did was coin flip on the event, but I only did it with eval. So that's the whole thing. But real account from the morning, the first thing I said was I'm sitting out of my real account. So there's no real trade today I'm taking. I said I'll take the bear zone possible on a resistance trade only on eval. So that was this morning. Either case, it's like a plan. Yeah, it's a loss of $15, whatever. So I don't at all. Markets like this are going to be a full coin flip. So I don't take that with my real account at all, especially into a news event right at the edge. I was betting on go the other way, but because I know because I know what it is, the risk on this isn't taking a real money loss. The risk is, well, there's a sale right now at ETF. I'll just try to knock out an eval or two, and I've got like 20 of them, and that's just one of the 20. I have so many past ones sitting there. Hold on 1 second. Hold on. Where is this? Oh, so I did hit it with one more eval. So there it is. So one of them went down, one of them went up. So that's the trade. That's the trade I wanted to take, but you know, hey, fuck it, we'll take it. Done. Okay, close that out. One was a win, one was a loss. I was saying goodbye to iTalk. See, this stupid shit happens, but at least hey, I'll take a win, I'll take a loss, whatever. No real trade, no real account. Loss on that one. Let's see how it works. It's some random shit. That's the trade I wanted to take. See, and then this is what happens sometimes. So remember, I said no long chase on this one. Although I drew it on there this morning when it was moving like this, I said I'm taking it along here. This little arch that I drew is the trade I want to take. And then again, when you have irrational markets being silly, you can overshoot and come back down. That's the period that we're in. Does everyone see that? Trade played out. I pocketed nothing. I lost one eval. I just passed that one. So that was it. Crazy thing is you think it will go higher. Like I'm reading chat. See, all you guys are wrong. That's the best part. All you guys are wrong. You can't predict this stuff right here. This is just random catalyst news event. Give me stupid, right? So my one tiny scalp from here to there on the negative res got blown on a pop. This morning I said no real trade today. Market's already DD band tap at the bottom. So this already is set out day for me. I will only trade small on the good setups that I do get. And we woke up this morning with just kind of all bearish setups and some weird numbers. And then we walked in the ISM data. So my trade was to do short from here, double down there to pop it right back down to bear zone. And look what it did when the event came out. It overshot and then popped right back down to bear zone. I drew this at 9:30 this morning. But the caveat, you understand this, right? Was I said no real trade today. I said I'm just gonna do evals. Right. The caveat being, when you tap lower DD band, your little warning here, in the mornings, the market's already kind of fulfilled that downside move that you want. So it's just a small scalp. So no real risk on the table today. Looks like I passed. Oh, I guess I did pass an eval because that was such a ridiculously crazy drop. How much did I move on this one? Yeah, so ETF is having a sale. I'm trying to stock up on 20 of those. Past ones. I passed a bunch of them all week. So remember, on days like this, you can choose to sit out, or you can just choose to trade some evals. Like a lot of those times when they're dirt cheap, when you have days like this, we call them coin flip days. You can just try to knock a couple of them out, pass them. No, you need to pay attention to resilience. It's the strongest indicator we have. There are days when it's a leading indicator under the most ideal conditions. There's days when it's not. Look, Nasdaq resilience being positive is the reason Nasdaq pushed to fill the gap and is there right now. I mean, it's like one of the best indicators that you can have, period. Look at this. I would never not look at it. I would use it I use it every single moment of every single trade. I stare at this all day long. Look right here was a Nasdaq while I was trying to sell off, push to fill the gap. I mean, sorry, SPY. Nasdaq was pushing up. But you have to listen to your greater market, right? The market doesn't necessarily want... Sorry, right here. Nasdaq pushed to fill the gap. And then this was just an event. Anytime there's an event in the market, You throw out all structure. Don't use any indicators when there's an event coming out. Like the structure is going to try to maintain as much as it can, but the event can be a blast. It goes out of the way. Look, the volume on the event is much more than the volume at the open. It's random. So this is literally a literal coin flip how Wall Street will react. So when you know it's a coin flip, don't go out there and gamble your real money on coin flip. If you guys are trying to trade this, you didn't listen to the event class that we teach. When you have an event coming out, don't have any real position going into the event. Like I had a big position going into the event, eval position. It wasn't even real. Like so it was real, but it's not. One of them I shorted here, another one I shorted here, and then the one that I shorted here paid off and actually passed that eval. The other one that I shorted before the event didn't. So essentially what I did was I shorted one eval here and here on the event. The second one after the pop happened when the S&P hit its upper limits, I shorted again, trade down. In a normal account, you could do the same thing. You can just cascade your trades, small, 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 and build your position. The S&P had its resistances up here by proxy, so that's why I still took a stab at it. But when you tap lower DD bands overnight, be cautious all the way in the morning and never trade a real position into an event. Like, don't risk your real funded accounts. I'm not doing any of my funded accounts today, or even my real account, my Robin's Cup account. I didn't touch it at all. Wake up today, you tap the DD band already in the morning. Just sit out days on your real stuff. Do you have a code? I do, but they have like the Elite Trader Funding has like their 85% off from their own Halloween sale. You should music on Zoom? Oh yeah. See, you guys spoke too soon, right? Coin flip day. Short trade is good. The problem with short trade, and I always teach you guys this, is that VIX is above your contango midpoint right now. When that happens, your pivots can overshoot before they realize. The overshoot distance is hard to guess how much it goes, especially when there's an event in the way. Okay, my trade, for the most part, is my plan is usually more right than it is wrong. And as you guys see, my plan is right. It just overshot. So before you get, and this is why you guys are all here to learn. It's why you probably are making money as a trader, because everyone here is like, oh, didn't work. Looks like it's going long. It fucking worked. Look at this. I was right. I told you guys. Y'all need to fucking listen to me. Take it back. Look how right I was. All of you. Look at that. Love y'all. That's what I'm saying. Don't be too quick. Coin flip market's gonna be random. Look, this is the trade I wanted to take, and look, it played out, it just overshot. One of them stopped out, one of them didn't. So that's it. Y'all gotta start trusting me. Funding accounts track class win. Yeah, that we can start doing that next week. Since we've wrapped up the 20 days on YouTube. Well, we can do that next week. We can start doing options and trader funding stuff. So whenever you have your risky days, right? When you're just like, I don't know, the market's kind of risky. There's an event coming through. Whatever. Don't put your funded account to it. Trade the evals, try to pass them. They only cost 10 or 20 bucks, especially when they have a sale. When they have a sale like this, your job is to pass 20 of them as fast as possible and get them on the back burner. If you want to do 20 accounts or pass however many you want to have as quick as possible, you always need at least 1 or 2 tradable and then 1 or 2 ready to be tradable. And the rest just like past evals. If you want to stack them up and do them all together, you can do that too. But you want to pass as many as you can so you have them on the back burner ready to go in case you bust your funded account. You got another one just sitting there. You got as many as you want sitting there. It's a cost balance on how much you want to maintain every month, right? Because keeping those passive evals, you still have to pay a monthly fee on them. Yeah, I love you guys. See, Anthony, you guys need to trust me. I gotta listen. When we took the break, I said, no longs, nuh-uh. Let the market be crazy today. All the signs today were pretty bad. But make sure you do listen to resilience. The resilience will tell you everything you need to know. But when there's an event or there's like a thing that happens that shocks the market, the index can move as quick as it wants despite what the stocks are doing. Let's observe today, right? For the most part, we always try to bet that S&P wins and QQQ doesn't when the S&P was negative. But it doesn't mean that it always is that way. Today, Nasdaq was strong enough to pull the S&P out of the hole. And that very rarely happens. So, and again, it's just how much money is flowing into the tech stocks. And while today the S&P was negative, we were expecting a little bit of resistance on the S&P side. Nasdaq, which was positive all day long, it just floated to fill its gap. So that was pretty much what Nasdaq wanted to do. And then this is the normal resistance that you would trade off of to get right to here, which is what it's doing. But the event moves the market in a random direction. This adds volatility. Like here was the event. What was this large candle right here? Guys, that was structure. That's the market getting right back on path. Right back to bear zone. Y'all see that? Where did that crazy sell-off candle go? Where did it come from? That's exactly why we teach you these things. Structure. Market said, nope, let's get back to where it needed to go. Really randomly. Touched that and then hit that and came down. That's the normal path that it should have taken. And the event just overshot it a little bit. And that's what events are. They're coin flips. So don't go in there and risk your real money on the coin flip, because while you may be right, look how much loss you can take even being right. Y'all, you guys get it? Yeah, and I see y'all in chat. Holy damn. Slip, slap, yeah. I told y'all. So y'all have to listen to me. Don't go in there with your real accounts. Being crazy. Brian says, I trust you with everything except I had a daughter. Yeah. Don't trust me with your daughter. Yeah, our code with ETF is 50% off, but the site is like 65 to 85. So go use the one on the site. Yeah, as Brian said, you should always stay on the signs point to high odds trade. When your odds are like medium to low, you can either just trade small or trade with an eval. Pass eval costs you 15, 20 bucks. On shorting vertical put spreads? Well, it depends on what conditions. What conditions are you looking for to short that? They're not a bad idea. Are you just trading the option, or are you also trading the stock too with it? Are you cash secured on it? Are you share secured? Are you, Michael? Or are you just as a day trade? Just the option by itself. The options by themselves. Just a day trade. Okay, so you're gonna do the same. Okay, so you're gonna do, since it's a vertical put spread, you're gonna do both same day expiration, right? You're not doing any diagonal spread on that. See, normally when I do short vertical spreads, I also add some calendar to that, so I make them a diagonal. I always love to take the options I buy to stretch my insurance out more. Like I did that. Remember that one trade I did on FOMC? Right, it was actually, that wasn't a vertical spread, but that was I stretched out the buy side a little longer. So even if you do 0-day, 0 DTE short vertical spreads when you're bullish, they're a great idea if you're trading. Now again, the best part about them, they're fixed loss. Your loss is fixed because your buy side, like your buy side, like your what we call the B trade, your buy side is closer to the money. I'm sorry, your buy side is farther out of the money. If you're shorting the spread, then you're buying the one further out. So what he's saying, guys, what the jargon we're yapping about here is if the market was like moving right here, shorting a vertical spread means that you buy a put down here and you sell a put up here. Okay. So the idea is that you're selling the more expensive put to immediately cash in on that premium for the day. 0-day, you want it to just decay to 0. Now, the thing is that the put that you buy is there just in case you have a blowout and the market crashes out. You bought the cheaper one, you sold the expensive one, which means you take a massive loss. You lose on both of them if the market closes in between the two. So you lose both premium. You make money if the market stays here, which is the difference in premium on both of those. And then down here, you make money as a balance of the Greeks, depending on how far you go past here. So in a short vertical spread, you lose here, you win big here, and you win small here. Did I get all those? Did I get all that correct? So you have to make sure that the way you leg in is not in a place where the market wants to be. So the trick is with here is you don't want these legs to be in a place that have probability of landing in between the two, especially on 0 days. And especially if on those 0 days it lands in there and hangs for a little bit, because you're just gonna lose on theta. So an example is here, if the market's like trading in bull zone and it's up here like this, and you're like, today I want to do a 0-day vertical spread. Okay. So let's do an example. Market's trading right here. All of a sudden it falls right to there and catches up right there. And you go, aha, I want to trade the short vertical spread, short put spread with the long side of the market. Okay. Right here, the puts are more expensive. Right when it dips here is when you're going to sell your puts exactly right there. Bear zone. Sorry. Bull zone, sorry. Right here, delta 5, max gamma, max IV on a big dip. Sell your puts. Market recovers and is holding and holding and holding and holding. Then you buy your puts here. So you sell the expensive, sell them expensive, buy when they're cheap, and then I have a lag. If the market gets here, you get the full win, right? You lose that, you gain that. And since you sold at the money and bought out of the money, this is a net credit. That makes money. As long as you don't fall out of bull zone, then you make money every day. Now, keep in mind that this is a strategy that people employ when they're net short the market, net short the stock. You understand, Michael? So in a 0 day, you're going to lose everything if you're wrong. Gain the premium if you're right. This is a short strategy for actually shorting the market. Imagine you're trying to build a short and hold it for months. You don't want to get a margin call. You sell vertical put spreads against your short. So if the market just trickles higher and higher and higher, you're just collecting premium to avoid a margin call, right? Yeah. So not a terrible structured trade to take, because if you're doing this, what is the probability that you open in here that you close in the middle? And that never happens. If you go from bear zone to middle, that's just weird. From bull zone to middle, that's just weird. If you're falling out of bull zone, you typically go to the other zone. So the way that I learned, and when Ashton was teaching me some of his little tricks here, this is like where the market doesn't stay. It only stays in the middle if it opens in the middle. If it opens on one side, you bet that it stays on one side. So you stretch your options across the zones because it's very rare to leave one zone and land in the middle. Does that make sense? So let's go back to S&P today. So the trick is on our side is you're going to put your, like an example, let's take the bear side case today. So you're bearish. You want to short a vertical call spread to be bearish to the market. Think before you start thinking about options. If you open in bear side, it is very rare that you just end up here in the middle. Does everyone understand that? It's almost never. You don't just mosey to the middle and stay there. Bear side wants to stay in the bear side, and if it doesn't, it wants to go to the bull side. So you're very rarely going to move to the middle and land there unless you open in the middle. So in days you don't open in the middle, that's exactly what you do. That's the kind of trades that you do. So in here, an example, market's starting to move lower, and it's bouncing on hedge pressure exactly right here. Aha, market might go long. Let me go ahead and buy my calls right here for 570. When the market hits that, right when it hits right here, dumps back in. Now the spread is really short if you just trade it like this. You're not going to make a huge amount, but you'll make consistent money. So right here, you bought your cheap calls, boom, for insurance. Right here, you sold your expensive calls. There's already a net credit because you legged, and also because you legged in. And I don't ever buy options together as a lot. I don't ever execute my spread at the same moment in time. You get better spread if you leg in like this. Now, one of your legs is naked for a little bit, which takes more risk, but you can always close it out. If you're trading expired QQQ, it's liquid enough just to close out. So either case, buy your cheap ones, market moves up, sell your expensive ones. And the only way you lose money is if it closes in the middle. And then you just sit on it all day. If the market closes in the bear zone, because this is a net credit, actually you lose small on this one. Lose small, win big, lose all. Okay. I misspoke earlier when I said when you break the side, you're going to make money up here. You lose small. It's fixed though. Fixed closed. You only lose all when it's in here in the middle, because both your options lose. If the market blasts the bull zone and keeps going, well, your cheap calls that you bought are going to be delta 60, delta 70, delta 80. And there is possible that this could ultimately win, but it just depends when you buy these towards expiration. Like if you bought this at the start of the day and you legged in this at the end of the day, this actually could be a win. But a worst case scenario, your loss is a small loss. Best case scenario, it's a small win. But opening in bear zone and closing in the middle is like practically not going to happen. So the chance of you losing the entire leg is so small. That's why the trade is spread that way. Just case in point, you're gonna make sure you sell calls to bet that we don't break out a bear zone when we open there, and you're gonna buy calls just in case we do. And as long as the market just goes nowhere, the best part about a credit spread is you're not just betting on direction, but if the market goes nowhere, you make all that money. The market chops around, you make all that money. The market goes up and comes right back down, you make all that money. So much better than futures trading in a choppy market You can play the flat side just selling vertical spreads on the other side. If it opens the bear side, you're going to sell vertical call spread. Opens the bull side, sell vertical put spread, and that's it. It's one of my favorite tricks. Now again, it's like a trickle money. You know, you're gonna like you create whatever credit you want. You're like, I want to make $2,000 today. Okay, set up your trade to either lose 2,000 or make 2,000. Right, set up your whatever it is, so you can just collect money every day that way. But if you're the day that you're wrong is you're gonna lose maybe 3 or 4 days worth of work. But not a terrible way to play when the market's expected to be flat. What is this one? The only reason I don't do that for a living, even though it's good money, is because a short-term capital gains tax, I'm taxed at like 40% on that. So while it's good to ward off a flat and choppy market, especially bull markets that don't necessarily sell off really hard, you're still cutting heavily into your gains on taxes. And it is calmer than futures trading because you basically just commit to the trade and let it expire. You don't have to close it. You don't have to do anything. At the end of the day, you just cash out. And it's a 0 day so that you take full loss if you lose. So while you do lose everything, you can fix your risk. You can say, if my risk is 1% a day on a $100,000 account, then you just spend $1,000. And then you either lose it all or you gain it all. Plus, one of the plus, whenever you do vertical spreads, what's good about them is that you can also reduce. You can modify the net credit, so you have margin credit in your account. So sometimes, like, you can keep spending more money to get more margin. That's kind of the interesting thing. So whenever you lower your risk, you get margin credit. So that way you don't get margin calls. So a lot of times in a margin call, you can execute a vertical spread to get margin credit so that you don't get a call on your account, like in unmargin accounts. A lot of options traders use that trick. Essentially gives you credit on your account. And by the way, my the short setup that I talked about today was the right setup after all. So structure 1, we just overshot. Okay, what am I trying to look for here? Oh, I gotta do a you definitely can make more in futures under certain conditions. Strong bull markets like we have now, futures the way to go. Buy the dip, buy the dip, buy the dip. It's good. Taxes are better. Really crazy bear markets that are volatile all over the place. It's harder to trade futures. The volatility is nuts and the margin's too high. You confidently know it's a bear market, but bear markets have like green days throughout them, like one red day, one green day, one red day, one green day. Every green day you have in a really strong bear market, sell your call spreads the next day. Like, you can leg in at the end of the day. Right at the end of the day to bet the market continues to fall the next day. And fix your loss. The best part about call spreads. We're fixing some of the things in our yeah, an epic credit spread run in 2022. Ben said haven't really thought of using them much in a while on SPX. Yeah, the one downside of day trading options is that you just pay more taxes on it. So you need to make sure that you're getting big blowout runs. The best way to day trade options is to make sure you don't lose a lot. So credit spreads are a way to go because you fix your loss if you do it correctly. You can even go further with like the iron condor route. But the idea is that you want to take a safe, slower approach to trading. You'll pay more in taxes, but you won't have big blowout days. You won't ever blow up your account if you do it right. Because you fix your loss. The way you blow up your accounts, you wake up in the morning and choose to take enough risk to blow up your account. But you can always choose not to do that. If you have a like for like 1-to-1 ratio of sold and bought calls, your loss is fixed in all scenarios. If you land in the middle of those two options, then you lose everything. And then you've already chose how much you were going to spend, so you just choose to fix that loss everything case to be X amount of dollars. You can say I want to lose everything and only be 2,000 on my 1K account, 100K account. Okay, that's 2%. So you can choose to fix your loss. You'll never blow up your account in a single trade. So that's the best part about options. You have full control if you design it correctly on your loss. And it's really good for risk management, but you pay a higher premium on taxes for that. So that's the downside. You have a buddy that trades full time and moved to Puerto Rico just for that, plus the women, for taxes. That's funny.